作为全球南方重要代表，中巴两国都认为，关税战、贸易战没有赢家，保护主义不是应对挑战的正确答案。中巴将共同维护自由贸易原则和多边贸易体制，营造开放、包容、非歧视的国际合作环境，保持全球经济增长的动力和活力。
Nos últimos meses, o mundo se tornou mais imprevisível, mais instável e mais fragmentado. China e Brasil estão determinados a unir suas vozes contra o unilateralismo e o protecionismo.
All right. Today's Wednesday, the 9th of July, and welcome to a new economic discussion. In this video, we're going to talk about the trade situation involving Brazil, as today we got the news that the Trump administration is on a roll, announcing new tariffs, and the latest being 50% tariffs against Brazilian exports. The president citing unfair trade practices as his reasoning. And immediately we got the news that Brazil is going to respond by retaliation and reciprocity to the 50% tariffs against Brazilian imports. Now, looking at the trade relationship between the U.S. and Brazil, we see that the total goods traded with Brazil were about $92 billion in the year 2024, with U.S. exports to Brazil approximately $50 billion. That is an increase of about 11.3% year on year, while we see U.S. imports from Brazil in 24 amounting to about $42 billion, up 8.3% year on year. And this is, of course, amounting to $7.4 billion of a trade surplus the United States had with Brazil. This is a 32% increase year on year. So what's going on here? Because we've heard before that the reason behind the tariff policy is to reduce the trade deficit with countries like Brazil. But turns out that we have a trade surplus with the country of Brazil. So what is the reason behind the 50% tariffs? What is the administration aiming for when they accuse Brazil of unfair trade practices? The reasoning goes to this exact situation that you're looking at right now. You can see that in the year 2000, South America, including Brazil, the largest trading partner was the United States, predominantly. Now, you fast forward to the year 2023, and we see that the picture has changed dramatically. The largest trading partner for South America, including Brazil, is now China. And this is the reason why I expect to see more hostilities against Brazil when it comes to the trade front. Why does it really matter if the largest trading partner for Brazil is China, not the US anymore? We care about that because we have certain leverages against China. They rely on a lot of agricultural exports. It's not a resource-rich country. They don't have a lot of metals, they don't have a lot of oil, a lot of gas, or farming fields. So they have to rely, and they've been relying on U.S. imports for years, until, of course, Brazil began to take over that share of the imports by China. So without further ado, folks, let's explore this topic right here and dive right into it. And here it is, in Focus Tonight. Nightmare. This is what the relationship between Brazil and China amount to the United States. Of course, as we talked about, China is the largest trading partner for Brazil. Brazil imports by country, 25% comes from China. But the United States is just a touch behind with about 16%. So the problem that we have with Brazil right now is they're choosing to import more from China, not the United States. The same token, China is choosing to import more from Brazil, not from the United States. And hence why we see the souring relationship between the two countries. Now, what does the United States exports to Brazil? Because if we talk about reciprocation, we expect that they're going to tariff our products by about 50%. The top U.S. exports to Brazil, including mineral, fuels, and oils, about $8.5 billion, spacecraft, nuclear reactors, electric machinery, plastics, chemicals, medical equipment, pharmaceuticals, vehicles. What do we import from Brazil? About $42 billion last year. Most of it comes from agricultural products and resources. If we just look at the orange juice market as an example, it illustrates this problematic relationship. The United States used to be a huge exporter of orange juice. The majority of the U.S. orange farms were in the state of Florida. But little by little, Brazil began to take market share away from U.S. farmers by dominating the orange and orange juice market, as they were able to underprice U.S. farmers. And hence we've seen destruction in U.S. orange farmlands across Florida, not to mention, of course, the diseases that we got. Yet the United States remains the #1 consumer when it comes to orange juice. You can see between 22 and 23, we have imported a record high of orange juice from Brazil. We also import a lot of beef from Brazil. You can see the huge difference that we have year on year, 24 over 23. In the first quarter of the year 2023, we've imported about 23,000 metric tons of Brazilian tallow. In the year 24, same quarter, we've imported 110,000 metric tons. Huge increase. And all of that, of course, comes at the expense of U.S. farmers, U.S. ranchers. Brazil also happens to be our fourth largest supplier of agricultural imports. Hence, this trade tension that we have between the U.S. and Brazil will impact a lot of agricultural, grain, and meats commodities. But the core of the problem and the challenge to America's economic dominance comes from the relationship between Brazil and China. A great illustration for you is this chart right here. It shows the U.S. share of global crop exports. You can see back in the 60s, we had pretty much 100% domination over the market share of soy, over 80% domination of the share of corn, and almost 50% market share in wheat. Since then, the share of these exports plummeted significantly, and the United States lost major market share. Who's been taking that market share away from the U.S.? This is another illustration for you. You can see exports from Brazil in yellow, and then exports from the U.S. in black. Since the dawn of the 21st century, we see that exports from Brazil, be it in corn, in soybeans, in chicken, or even cotton, been increasing at the expense of the market share of the United States. And since then, we have seen a lot of farmland loss in this country. We have seen a lot of wealth being lost from farmers in this country, and the wealth has been since transferred to farmers in Brazil. Now, who's the biggest consumer of these agricultural products, of these commodities? The answer is China. And since China is poor when it comes to resources, they've been relying on the United States for years, and that gave us leverage in trade negotiations, in geopolitical negotiations. But this leverage is losing its grip against China because China found a new market to import all of these grains, agricultural products, and meats from, and that is the country of Brazil. You can see that beef suppliers to China in the year 22, 1.1 million metric tons came from Brazil. The United States is not even second or third or fourth. The United States stands at number 6 when it comes to the top beef suppliers to China. We used to be number 1. And as the trade tensions continue, China continues to replace its share of imports from the United States to Brazil. For example, here we see the share of U.S. pork cancellations, the biggest since the year 2020. China is a huge consumer of pork, but they're canceling pork import orders from the U.S., and they're replacing them from, you guessed it, Brazil. You can see China's pork imports. Brazil is now dominating the market share, and that of course comes at the expense of U.S. pork farmers. Soybeans is probably another devastating example. Brazil pretty much dominates China's soybean imports, but since the election of Donald Trump, we have seen U.S. farmers gaining more market share. Of course, the Chinese are importing less soybean overall, but they've chosen to go with U.S. farmers this time around because weather was not pretty good for the crop in Brazil. And they probably wanted to do some favors and some good gestures with the new American administration. But since then, since we got the tariffs, Brazilian farmers are regaining their advantage in the soybean market by redominating China's imports. All in all, when you look at this chart right here, China's agricultural imports, we used to dominate that, but since the election of Donald Trump, the first administration of Trump, we have seen the Chinese shifting toward Brazil. And now the gap couldn't be any bigger. The expectations are that this gap is going to continue to increase. The administration is not happy about that. They want China to buy meats and grains and agricultural products from U.S. farmers, not Brazilian farmers. And they accuse Brazil with unfair trade practices in underpricing U.S. farmers. But there is another entanglement that's probably more problematic than the domination of the market share in crops and meats by Brazil for Chinese imports. As you can see, China is perhaps the biggest importer of beef. We have seen a slowdown in consumption in the year 24 as the Chinese economy slowed down. And we see more problems with the outbreak of the bird flu in poultry from Brazil. So we see China banning the imports of poultry, at least for now, worth about $1 billion. Perhaps that's going to be rerouted to the United States. But all in all, Brazil has been gaining massive market share in the meats market. For example, in 21, their market share in beef was about 20.4%. Fast forward to 2025, it's up to 28.7%. Chicken went from 32% to 36%. Pork went from 11% to 16%. And that, by the way, includes imports from the U.S. Yep, we still buy beef as we do orange juice. We still buy beef from Brazil. What is the reason? If you look at live cattle futures, meat is now becoming a luxury. Meat is becoming more expensive than ever before. And our farmers cannot compete either by the means of production or pricing when it comes to the competitors from Brazil. So even here in the United States, we import beef from Brazil to beat the pricing and make it more accessible to the consumer. All of that comes at the expense of U.S. farmers. And even with the tariffs initially against Brazil, we have seen more Brazilian exports of beef than before the tariffs. And this is why the president is upping the tariff rate all the way to 50, because perhaps 10% was not enough. And Brazilian beef remains cheaper than U.S. beef. But if we add 50% on that, maybe, now that's going to reroute demand back to U.S. farmers. At the end of the day, what would that do? It's going to increase the cost in the U.S. consumer, and this is why we see live cattle futures continuing to go higher. Brazil could become the world's biggest beef producer in 2026, replacing the United States, where ranchers face difficulties to increase cattle inventories, and companies would tend to produce less beef. Brazil is already the world's biggest beef exporter. For sales outside of a predetermined annual quota of 65,000 tons, Brazilian beef was previously subject to a 26.4% tariff in the United States. An additional 10% tariff now applies. Well, with the update, an additional 50 will apply. For Brazilian beef sales inside quota, the U.S. administration imposed a tariff of 10% from zero. So if you thought that steak is already expensive, you gotta prepare that it's gonna get even more expensive. The annual quota of 65,000 tons was filled in January, so we're already done. Any new beef imports from Brazil will be subject to the tariff, which is no longer the 10%. It's now 50%. Now, the Brazilians are not worried about these tariffs yet because they still have a consumer from China. And China imported some 12% more Brazilian beef so far this year, or about 392,000 metric tons. We know that U.S. farmers are an important voting bloc in the U.S. We're talking about states like Missouri. We're talking about states like Iowa, Illinois, Wisconsin, Pennsylvania. All of these are swing votes, and the farmers' vote matters a lot. While China is becoming less dependent on agricultural imports from the U.S., as they found a new market in Brazil, U.S. farmers remain reliant on China, specifically when it comes to soybeans. As you can see, China's soybeans imports from the U.S., 31% share, but U.S. soybean exports to China amount to 52% of all exports of soybeans. So unfortunately, U.S. farmers are reliant on China to sell their soybeans, and if China chooses to go with Brazilian soybeans, we got a major problem here.
The agricultural commodities market is showing clear signs of what many analysts had anticipated. Brazilian soybean shipments to China are rising as the U.S. escalates its trade war. Reports indicate not only a spike in volumes contracted by Chinese buyers in the first quarter, but also an increase in premiums at a time of year when they typically fall, as post-harvest stocks in Brazil are usually high. This market analyst says the signs of such movement could be seen even before the new U.S. tariff policies were officially implemented by President Donald Trump.
I think they were expecting something like that from Trump, and so they started to increase their imports from Brazil already before the establishment of the tariffs. But now it's very clear that they are searching more products from Brazil.
And U.S. farmers have been complaining to the administration that despite the so-called China deal and the truce that we've made with China, they continue to buy soybeans and other agricultural products from Brazil, not from U.S. farmers. So what is the point of the truce if we're not helping U.S. farmers, and hence the action that the administration took today. While the United States in 22-23 accounted for about 28% of China's soybean imports, it has been a critical market for U.S. farmers, representing more than half of U.S. soybean exports in the most recent marketing year. President Trump's trade war has hurt sales of American soybeans, sorghum, and pork products to China and created new opportunities for Brazil. Brazil aims to export even more agricultural goods to China, including sorghum, pork, and chicken, and seize market share, says Luis Rua, who oversees foreign trade for Brazil's Ministry of Agriculture, according to Dan Henbury, a corn and soy grower in Buffalo, Illinois. He says that what they, China, will buy is what they barely need to get by. If South America is short, they'll buy from us. So in the case of a bird flu, they're going to rotate the demand to the U.S. In the case of a bad crop from Brazil, okay, they're going to reroute the demand back to the U.S. That's not going to help U.S. farmers, though. Chinese buyers have also avoided U.S. wheat and bought 400 to 500,000 metric tons from Australia and Canada in recent weeks. U.S. farmers hope China may buy American farm goods as part of her trade negotiations. However, Chinese importers will be more reluctant to book large purchases because of remaining trade barriers and uncertainty over what will happen when the pause expires. And to be honest with you, trade deal or no trade deal, the Chinese are kicking the can down the road, and they have no interest in a legitimate trade deal with us because it is in their national interest, not just from an expense perspective alone, to import stuff from Brazil, not the U.S. It saves them a lot of money, but it also diversifies the risk. We know that we have pretty much a cold war between the U.S. and China, and the expectations are that this is going to intensify in the years to come. And China doesn't want to be too reliant on the U.S. At the same time, we don't want to be too reliant on China either, and hence we have this trade tension. And I don't think that China is going to reroute their orders away from Brazil. I think they want to cement this relationship and dominate South America, but specifically Brazil, which becomes the most important country because it is the source of food, agriculture, grains, and meats, and everything else that the Chinese consumer rely on. So we see China investing in farms in Brazil. If there's a bad crop, China invests. China expands the farmland in Brazil. China builds ports in Brazil and make Brazil more reliant on China. And I don't expect this to change at all. Matter of fact, I think that if we have more tensions in the trade war, it's going to backfire. It's not going to lead to China to import more stuff from the U.S. It's going to lead China to become even more reliant on South American, but specifically Brazilian imports. The headline reads, China seeks a united front with Latin America in countering Trump trade war. If you recall, just a few months ago, Chinese President Xi visited over 30 countries in South, Central America, and the Caribbean. Of course, that raises more alarms about Chinese military presence, whether we have these ports expansions and building as a cover for Chinese military expansion. The United States sees China's domination on South America and Brazil as a national security concern, and hence we have a big backlash against Brazil. Yet the Brazilians, led by President Lula, say that they're not afraid of U.S. retaliation over China ties. Recently, President Trump threatened that any country that joins the BRICS alliance will face an additional 10% tariff on top of the rate that they're writing out right now this month. President Lula came out just a couple of days ago, said the BRICS nations are not really looking for anti-American or confrontation with the U.S., adding that the world does not need an emperor. And that comment, of course, triggered the Trump administration to retaliate and increase the tariffs against Brazil. Now, to conclude this topic, ladies and gentlemen, you gotta understand that we're living in a new world. We're seeing this change. It's due to happen. It will continue to happen. We see more isolationism. We see the U.S. losing a lot of partners and decoupling from China, which means that the U.S. will have no other choice but to repair its relationship with European Union countries. The United States have no other choice but to continue to dominate in their relationships in the Middle East. While on the other hand, we see China beginning to dominate South America, Central America, Africa, Asian countries. And of course, China is becoming a huge competitor in the Middle East. Middle Eastern oil exporters now rely on China more than the United States, but they rely on U.S. military aid, military support, and equipment more than they do China, so they're in a really peculiar position. But this kind of dynamic in the world, where we see decoupling with China, and we see two countries now initiating an economic Cold War that will probably last for decades to come, we will more likely than not see persistent inflation as resources become more scarce and tariffed, and we have less trade with the world, not more. We're probably going to see the BRICS alliance expanding becoming a major competition to the United States, which will probably lead to BRICS nations to begin to explore a new reserve currency that competes with the US dollar. We already see trade among BRICS nations now getting closer to the 1 trillion mark. It increased 40% from 2021 to 2024. And as trade between these nations continue to expand, it is inevitable that we will see a new reserve currency by these nations. What's going to happen is the US will use its power, remaining power that is, to try to prevent the expansion of this alliance. That if you join, there are consequences. I don't think Brazil is going to leave this alliance as they become more reliant on China. But maybe it's going to prevent a lot of Middle Eastern countries from joining the alliance, because they still seek the protection of the United States from a military standpoint, even though the biggest economic trading partner for them is China. But that could change too if the Chinese begin to expand their military-industrial complex and begin to compete with the US from a military standpoint. They might be able to absorb the Middle East too. We continue to lose more and more economic market share and more economic influence in this new world. And with that, folks, I hope you enjoyed the discussion tonight. And if you did, return the favor by pressing the like button, subscribing to the channel, leaving us a nice comment in the section below, or joining us as a Maverick member. This is all I got for you for now. Thank you for listening. Thank you for watching. I appreciate and love all of you. I'll be talking to you again tomorrow. Good night.